Now, one of the other ways that Affin Huang is known for squeezing out the little bit of outperformance is your tactical cash holding. So when you feel that the market is going to go up, you lower down your cash holdings, and if you feel negative about the market, then you raise more cash. And I want to direct this question to you, David, because you're the CIO. Isn't this a risky proposition because the market can turn anytime and you can actually make a wrong bet?
It is true it's risky because given how volatile markets can be, markets can turn on a dime for whatever reason, reasons that may not make sense to you. But it is a philosophy that Affin Huang as a firm has always believed in since we started. From the first day I joined, even from before I joined, and the first day I joined, Affin Huang, Teng as my boss, came from an insurance background. And the key difference in managing funds, if you employ that kind of philosophy coming from that sort of a background, is that you want to manage the money as though it is your own money. And managing your own money is very different from employing a very typical attitude of managing other people's money. So what if it makes money or doesn't make money? I think that's a key difference, and that's a philosophy or a mindset that we want to inculcate in the entire firm, in the entire investment team. And I believe to a certain extent we've been successful in that. On the question of tactical or active asset allocation strategies, this ties in very closely with what Teng mentioned earlier about always wanting to deliver positive returns, trying to. On the chart earlier, it shows aiming to. Okay? There's no word guarantee there. It says aim to. And we aim to deliver positive returns to our investors over a 3 to 5 year horizon, regardless of how market conditions are. And I believe it's very important to employ active asset allocation strategies to achieve that. Do we get it right all the time? If we did, we won't be here. Okay? The answer is no. But over the past 15 years, we've been able to get it right the majority of the time. I would say I'll put the odds at about 70%. And just 2 weeks ago, I had a small session with some of my sales colleagues. They invited a small group of investors to listen to our presentation about our views on the markets. And I used the analogy of being a fisherman. And that's how active asset allocation means. If you're a fisherman, and you think the weather is going to be stormy, the seas are going to be rough, you do not want to go out deep into the ocean to try to catch that big garupa. Right? You could try to be a hero, and we're not in the business of trying to be heroes here in fund management. We're trying to grow your wealth sustainably without too many sleepless nights. And I believe that employing that kind of mindset helps us to weather the storms better. Not always can you catch the big fish. Sometimes if the weather does not permit, you stay closer to shore, catch the ikan bilis, the anchovies. It still meets your needs. And that's what we aim to deliver.